Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, November 4th, 2013. S&P futures have broken out above the prior multi-year high, and last week auctioned up to a new multi-year high at 1773. The new multi-year high occurred on the night before the FOMC announcement. Following the FOMC announcement, when the Federal Reserve confirmed it would maintain its quantitative easing, S&P futures sold down below the multi-year high at 1773 and initially found support down at 1750. S&P futures auctioned back to 1764. The selling pressure returned on Friday, and the S&P traded modestly below Thursday's low, pulling back to 1747. Following the pullback, the selling pressure ended, and S&P futures auctioned up to 1754. During Sunday's Globex session, the market continued higher and auctioned back up to the 1764 price level. On Monday, the S&P opened the session at the high. For a detailed look at today's market developments, we'll turn our analysis to the point and figure chart. After auctioning above Friday's low at 1747 and trading back up to what we had deemed to be near-term resistance at or near 1762, S&P futures sold down from the opening range high and pulled back to 1756, modestly above Friday's close. There was no retest of the overnight low at 1754. S&P futures rallied up off the low, trading back to 1759 and consolidated before auctioning back up to retest the opening range high into Monday's close. Following last Wednesday's sell-off, when the S&P initially pulled back to 1750, each time it has auctioned up to the 1762-1764 price level, the broad benchmark index has encountered minor resistance and has sold back down through the trading range. The 1764 price level is therefore the minor obstacle which stands in the way of the S&P auctioning back up to retest the multi-year high at 1773. As you can see on the 5-tick range chart, as price has auctioned up to the minor resistance level, the order flow events have indicated that buying interest is waning. Notice the price structure as the market auctions up off the low and retests minor resistance. Here in the 5-tick range chart, you see an example of an exponential price sequence, where each of the micro 5-tick samples make higher highs and higher lows as price auctions up to resistance. Notice late in the day when the S&P retested micro resistance at 1764, the price sequence begins to shift as the 5-tick range samples, which had been trading vertically higher, begin to overlap and move horizontally. Once again, the order flow events indicate buy programs waning or that the computerized buy programs cease executing to the buy side, and ultimately price downticks and pulls back into the trading range. Here we see an example of the period where the S&P spent 3 hours trading in roughly a 2-point trading range. Coming into Tuesday's session, if the S&P is indeed going to auction above minor resistance at 1764, buying interest has to be maintained. The characteristic of strong buying interest, as indicated in the earlier example of the 5-tick range chart, has an exponential quality associated with it. There is no stalling, pausing, lacking momentum, pulling back into the trading range. Above minor resistance at 1764 is the multi-year high at 1773. As we've been noting in our recent commentary, there is very little in the way of substantive supply between 1764 and 1768. Hence, it would not take much in the way of genuine buying for the S&P to continue higher and retest the multi-year high. As the S&P has auctioned up off of Friday's low at 1747, several minor or fractal lows have developed in the price structure. Prior support was located down at 1751. On Friday, the S&P found minor support at 1753, and again at Sunday's open at 1754. These price levels may continue to provide minor support as long as significant selling pressure does not return. Below Friday's low, the more ideal support level is located down at 1740, and the 3-day low rests down at 1736. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.